Welcome to Smart Stock Watch. Today is September 23rd, 2025, and we're diving into the latest earnings report from AAR, a leading provider of aviation services. Joining us is John, senior analyst from Smart Stock Watch. John, AAR has just released their fiscal year 2026 first quarter results. Can you give us a brief overview of the company and the report?
Absolutely. AAR is a global aerospace and defense aftermarket solutions company supporting both commercial and government customers. In their latest report, they announced a strong start to the fiscal year with significant growth across all segments, particularly in parts supply and new parts distribution activities.
Revenue and profitability overview. Let's start with the top line. AAR reported sales of $740 million for the first quarter, marking a 12% increase compared to last year. John, what are the key drivers behind this growth?
The growth was largely driven by a 27% increase in parts supply, which is a testament to AAR's strong market position and operational efficiencies. Additionally, their new parts distribution activities have been performing exceptionally well, contributing significantly to the overall sales increase.
And what about profitability? How did AAR fare in terms of earnings?
AAR reported an adjusted diluted EPS of 18 cents, which is a 27% increase from the previous year. This was well above the analysts' forecast of 98 cents. Their adjusted EBITDA also saw an 18% increase, reaching $87 million, with margins expanding to 11.7% from 11.3%.
Operational efficiencies and future outlook. John, AAR's operational margin improved significantly this quarter. What factors contributed to this enhancement?
The improvement in operational margin, which rose to 8.8% from 6.6% last year, is primarily due to increased volume and profitability in their new parts distribution activities. AAR has also been disciplined in cost management, which has further bolstered their margins.
Looking ahead, what strategic initiatives is AAR focusing on to sustain this growth?
AAR is heavily investing in their parts supply segment to support rapid growth. They recently acquired Aerostrat, enhancing their Trax software capabilities. With a strong demand for their offerings and a multi-year backlog in repair and engineering, AAR is well-positioned for continued growth.
CEO insights and strategic objectives. John, what insights did AAR CEO John M. Holmes share regarding the company's strategic objectives and future prospects?
CEO John M. Holmes emphasized the company's focus on strategic objectives and maintaining a strong financial position. He highlighted the expected sales growth across all segments and expressed optimism about the opportunities for Trax within their integrated solutions segment. Holmes also mentioned the benefits of prior investments and portfolio upgrades, which are expected to drive further margin improvement and cash flow generation.
Key takeaways. In summary, AAR has delivered a robust performance in the first quarter of fiscal year 2026, with impressive growth in sales and profitability. Their strategic investments and focus on operational efficiencies are paying off, positioning them well for future growth. Thank you for joining us, John.
Thank you for having me. AAR's strong start to the fiscal year and their strategic initiatives make them a compelling investment prospect.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe to our channel. We'd love to hear your thoughts on AAR's performance in the comments below. Until next time.